The street picks up pace in the second half of trade with the Nifty reclaiming the 24K mark and broader indices moving in tandem. FMCG and real estate stocks are holding strong while pharma, metals and IT remain under pressure. Auto engineering stocks come under pressure after KPIT Tech warned of a revenue decline due to weak European demand. The cautious outlook also weighed on Tata Tech and Tata Elxsi amid concerns over softer auto engineering spending. Consumer stocks gained after Citi upgraded Titan, Page and Havells to buy. The brokerage cited improving growth visibility, favorable valuations and stronger earnings prospects, with jewelry demand, innerwear recovery and electrical margins expected to support the next leg of growth. Shares of car trade and MCX gained after upbeat growth commentary. Car trade highlighted its AI-led expansion strategy and moved towards a full-stack automotive ecosystem, while Jefferies initiated coverage on MCX with a buy, citing strong structural growth in India's commodity derivatives market. June auto sales remained robust, led by Mahindra & Mahindra and Maruti Suzuki on strong domestic demand and exports. Hyundai reported lower production volume following a fire-related disruption, but said operations have normalized and lost output will be recovered during the current quarter. GST collections rose nearly 15% year-over-year to a record of 1.95 lakh crore in June, driven by robust growth in integrated GST collections. The strong tax inflows point to resilient consumption and healthy business activity. Capital market stocks are in focus as tighter broker funding norms come into effect. The new rules restrict bank funding for proprietary trading, tighten collateral requirements and limit leverage, a move that could raise funding costs for brokers such as Angel One, Motilal Oswal and Nuvama. Hello and welcome. You're watching Closing Trades here on Nifty Now. I'm Harsh Saita. Very nice bounce seen in the market, 150 plus points from the lows of the day. We're doing well for ourselves. That was to the high. You've seen around a 20-point decline from that point as well. So we're doing fairly well. In terms of the key reasons for the up move, we're seeing some good traction within the banking pack. And even within banks, let me quickly pull out some. Axis Bank is up 2%, Kotak is up 1.5%. So those are two top gainers from within the Nifty pack. Eternal is up 5%, Nestle is up 3.25%, Asian Paints is up 3%, Adani Enterprises up 3%, some good moves seen. HUL also seeing some good zing, 3% around thereabouts higher. Adani Ports is up 2.5%, that's the other one which is gaining traction. And M&M, which came out with numbers with regard to its June auto sales, that one is also doing well. It's also the breadth which is supportive, 2:1 to the advances is what we're seeing. Pressure, well, it's IT and metals. Hindalco, HCL Tech, Tech Mahindra, the three key losers on the Nifty. So TCS, Infi, both of those down over 1%. Coal India is down over 1%. Tata Motors, PV, L&T are just some of the others which are seeing some bit of pressure this Wednesday. When you're looking at IT, that's the other one which is in focus, and we spoke about how KPIT is one of those, but Coforge is also down 4+% in trade. Oracle and Persistent are the ones which are trending in the green, with LTI Mindtree absolutely flat. Outside of that, the rest of the IT pack currently sitting in the red. Realty is showing some real good signs. You're seeing some decent traction in Godrej Properties, up 4%, DLF up 3.5%, Loda up 3.25%. Phoenix Mills up 3%, Prestige up 3%. So some good zing seen across the board with regard to some of the real estate names. You want to keep those on your radar, and we'll speak a little bit about those as well during the course of the next hour, hour and a half. Sectors, I want to quickly pick those up. And we spoke a little bit about realty, but FMCG is the other one 2% higher. Auto is also doing well, 1% higher on the Nifty Auto Index. PSU banks and the Nifty Bank also doing okay. IT and metals are the ones which are leading the losers within the sectoral pack. Broader markets also doing fairly okay. The mid-cap index up a fifth, the small-cap index up 0.5%. But of course, a bulk of the strength in the large-cap index has been provided by the banks. And quickly on to contributors. Let's quickly pull those up. Reliance, Eternal, Axis Bank are just some of those contributors which are sitting in the green and contributing positively. It's also the breadth which is contributing positively to the index. But let me go across. Are we here with the lowdown of the latest June auto sales data which has come in, and of course the latest stocks in focus as a result of that? Are we with stocks and how have they fared?
The auto sales numbers have started to come in, and before deep diving into the specific numbers, let me give you an overview of how the companies have fared, with Hyundai and Maruti missing their estimates. But M&M Auto, Ashok Leyland and Eicher VECV segment has performed extremely well, and that is the reaction we can see in the stocks as well, with the inline stocks being Escorts, Kubota, M&M Tractors and Hero Motorspades, whose numbers have come in line. Talking something about the specific numbers, Maruti has sold around 2 lakh cars, which is around 20% up on a yearly basis. But when you see the monthly, there is a decline of around 18 to 19%, with M&M Auto outperforming its estimates and selling 1,06,000 units, and Hyundai coming down at around 51,000 units. It is also important to note that there was a loss of production of around 13,900 units because of a fire incident at the supplier's manufacturing facility for Hyundai. Talking about the CV segment, has performed surprisingly well, with Ashok Leyland beating its estimate and Eicher Motors VCV also beating its estimate, selling around 19,194 units for Ashok Leyland, and Eicher Motors selling around 9,500 units. Also, when we talk about Hero MotoCorp, we can see that there is a 2% decline on a yearly basis in the sales number, and they have sold around 5,40,000 units, with the tractor segment with El Nino impact coming in that could be seen in the months going forward. The current month seems to have fared seemingly positive, with 13,695 units being sold for Escorts and 59,935 units being sold for M&M Tractor.
Okay. Thank you for that, Avi. In fact, let me bring on board Ashwin Patel from LKP Securities, joining us this afternoon to discuss exactly that. Ashwin, it's been a while, so thanks so much for joining us this afternoon. Give us a sense. Four-wheelers, passenger vehicles is where probably some bit of caution is there with regard to the numbers. How are you reading into those two numbers, Hyundai and Maruti?
Well, as far as Maruti is concerned, I would say that the numbers have come below their expectations, mainly on the month-on-month basis. YOY, it's okay. I mean, it's not a huge growth as well. So on a month-on-month basis also, we can see some sort of decline in this month. Mainly, because the monsoon months are not really very strong as such. But, we think that the demand slightly is moving down on the rural side. We have seen a bad June in terms of monsoon. So the low end, the vehicles of Maruti, as well as on the, slightly the compact segment, I would say, they have faced the brunt. And that has led, to this kind of numbers, because, they both these segments contribute about the 40 to 50% of their total volumes. So I would say that that is the reason why, mainly the petrol, the prices, the petrol price hike, the fuel price hike that has happened over the past couple of months, that has also been one of the reasons. And secondly, the rural sales have not been that good because of, below the expected monsoon, or I would say a huge deficit in the month of June. So Maruti, on a month basis, they have underperformed. And if you talk about Hyundai, yeah, I mean that 13,900 units loss they had because of fire incident at one of their vendors' place. So that is one reason. But otherwise also Hyundai also is selling in the same shape. So I would say that both of these companies have actually underperformed, the market's expectations as far as this particular month is concerned.
Worry, Ashwin, would you expect this to probably also spill over to next month, maybe, or next quarter?
Yeah, definitely. I mean, next quarter is one quarter to watch out for, because if you see, July is one of the months which accounts for about 32% of the total yearly monsoon, because the southwest monsoon is of about 80% of the total yearly, and 32% comes in the month of July. So that and 29% in the month of August, 20% in the month of September. So all these, these 3 months are very, very important as far as the monsoon outlook is concerned. And definitely because of that, the rural impact will be seen for not only for Maruti Hyundai, or also for other sectors like tractors and two-wheelers as well. The entire auto industry will be, watching out these 3 months very carefully. And if we report deficit monsoons in these 3 months, then we can see auto sector going for a toss. So this quarter is very, very a cautious one, and everybody will be expecting that we have some good monsoons to recover or to offset what we have seen in the month of June. And definitely that can be a big lever for the overall auto industry, and not only for Maruti and Hyundai.
Yeah, I mean, it's a concern, right? Discretionary, at least at the lower end, the affordable vehicles is where some of the pain seems to reside. Escorts and M&M tractors, though, largely inline numbers you would assess, Ashwin?
Yes, they have come out with good set of numbers. I would
Yes.
say, better than expectations, because June was like a month where the farmers build up inventory for a good upcoming season of monsoon, which will be seen in July, August, and September. So the readiness of the farmers is seen in this particular month. But going forward, we are definitely concerned, as I said earlier, because if this doesn't pan out well, I mean, the monsoon doesn't pan out well, then we can see some sort of dip in the July, August, and sales numbers. And as it is, we have seen a very strong base of FY26. So where the tractor numbers were grew, the tractor sales grew by about 24%. So I would say that on that base, as well as on a weak monsoon, because El Nino is not at that strong. It is just a simple El Nino that has been set in. The super strong El Nino, which is expected to happen in the month of September onwards. So we are definitely slightly positive at this point in time, thinking that the way the monsoon has panned out over the past few days, if such a monsoon continues in the month of July and then August and September, then we can have a good, a strong auto numbers. And the tractor outlook, which most of the companies have given, of about 1% or 2% growth, we may see surpassing those numbers if monsoon pans out well. But if it doesn't, then we are for a toss.
Okay. And when should one expect the timing of the impact of this to be? So, how should one assess numbers for both farm equipment as well as for passenger vehicles? When will the full impact get translated? Would it be mid-August? By then, there'll be better clarity. End of August? What should we look at in terms of timeline, Ashwin?
See, because if you see the El Nino, which is expected to set by September, so the main impact can come on the Rabi crop sowing. Kharif may escape a bit, but Rabi can have an impact. So the real test will be from September onwards, because monsoon, if the Kharif crop is good, not good, but slightly better than expected, then we can see a good second quarter. But after that, maybe like as far as the thing that you are saying about timing, so maybe like September onwards will be the real testing time. And the Rabi that is known for the winter crop, we can see some sort of negativity in the Q3 and in the following quarter of Q4.
CV is the other space which has actually done very well for itself, right? This month, what do you think is driving the CV demand, and is it sustainable?
Yeah, CV demand, we are into a good CV cycle at this point
Yes.
in time, I guess. So because CVs, over the last 6, 7 months, they have started showing green shoots, because before that they were not performing that well. But now we are moving into a deeper CV cycle of positivity, where, a CV cycle is of about 2.5 years of strong sales, and then, a dip of about approximately same time period. So now it's like a time of of some sort of activity that is happening in the infrastructure space as well as the mining space, construction, etc. And therefore, this CV demand is panning out well. Also, within the CVs, I would say the LCVs have performed really well for companies like Eicher Motors and companies like Ashok Leyland. So for both these companies, if you see observe closely, then the LCVs have performed well because the LCVs had not had a great year about 1 or 2 years ago. But now with this QSR, and all this e-commerce platform and all proliferating into the corners of the country, this LCV demand is on an up move. So within the CVs also, LCV demand is looking better than the MHCV, but MHCV is also definitely panning out well, and I think this demand can be sustained going forward.
And Ashwin, the other piece is two-wheelers, and only Heroes come out with numbers, largely inline set. But what are you penciling in terms of the two-wheeler expectations?
I have seen only Hero
Yes,
coming out with
yes.
a
It's
set of
only Hero.
numbers.
You're right. You're
Yeah, the
right. It's
other
only Hero.
2 or 3, the Ather, the likes of Ather, TVS, Bajaj, etc., are yet to come out. So on a broad sector, we cannot comment. But definitely, if you look at Heroes, the numbers are actually below expectations of 2% decline and 5% month-on-month decline. So I think the two-wheelers also will start facing the heat as the El Nino sets its foot deeper into the country. So the going forward, I think the next quarter as well as Q3 will be the 2 quarters to watch out for the two-wheeler sector. But export-oriented sectors or EV-oriented companies like Ather, Bajaj Auto, TVS will be in a much better position because of the EV proliferation that we are seeing and the government support that we are getting for the EVs.
Last piece is with regard to this Delhi EV policy, right? How are you looking at that policy? How realistic is it to execute this kind of a policy at a ground level? Are there challenges? Who will the winners be? Any views or thoughts?
Yeah, definitely. As you are saying, on the EV policy, where it has got just, announced in the city of Delhi. So, other cities also may follow suit. But the readiness of the government and the readiness of the infrastructure is really very important because we do not know. I mean, the expansion of the infrastructure, the charging points, etc., are not up to the mark at this point in time. So I think Delhi is just accounting about 2 to 3% of the total volumes of the two-wheeler industry, but still that is a big number. And before the two-wheelers, the three-wheeler industry is going to get turned into the EVs, space. So even over there, like Bajaj Auto and all, they will have to pull up their socks. But I think the readiness is not there because it's too sudden, too quick. The pace at which the thing is announced is really surprised us. So I think it will take some time for all the major OEMs to turn into a pure play EV kind of on front of the two wheelers as well as on the three wheelers. So demand definitely will get impacted over there, and the readiness is also really very challenging. So we need to wait and watch how it pans out as the date comes closer to us.
Charging infra, right, Ashwin? Is that the right way to read it?
Exactly.
Perfect. Okay. Thank you, Ashwin, for that. Gives us a very good lowdown with regard to autos, and always very good speaking with you.
Thank you.
All right. We'll swim a very short break, come back. On the other side, in fact, we will have Rohit Siksaria, who's from Sundaram Mutual, who will come in and give us his views with regard to everything that's happening in markets. Stay with us. Welcome back, and we're joined by Rohit Siksaria, Sundaram Mutual, joining us this afternoon to give us a sense of how he's looking at the market. Rohit, thank you so much for waiting by very, very patiently. Let me first start off by understanding your view on the current market that we are in. We're probably trading at just about sub 18 times 1 year forward, which is FY27. Do you see a risk to earnings, if at all, from the monsoon or any other risks at this point, which should probably keep you circumspect?
No, actually, we are very constructive on markets now. The key narrative about India macro weakness was all related to crude prices going up. Now, with crude coming back down to $70-$75, the entire weakness narrative flips. So we have seen crude coming down. So the worries of inflation going up also comes off to that extent. Even GSEC yields, we have seen already started cooling off. RBI announced this FCNR deposits, so that will take care of the rupee weakness. So in that environment, we are quite constructive on the overall markets. Earnings side, as you mentioned, earnings initially before the start of the year, we were expecting for Nifty something like a 15% kind of earnings growth. There will be some downgrades to that because at least Q1 and to some extent part of Q2 will also face some weakness because of sharp inflation in raw materials which came from the entire oil and petrochemical complex. However, I believe market will look through that because as a one-off temporary weakness, because going ahead from second half, things should come back to normal and market should come back to the same old growth range.
Triggers be, Rohit, in your opinion, for markets to start to turn towards the normal, which is, I assume, which means that you expect the multiples to trend towards 20, at least on the benchmark?
Yeah, definitely. So that I guess will start happening as earnings start flowing in. We start hearing from the companies about how long they feel this disruption will last for their earnings. Right now, my belief is Q1 will see lower earnings mainly from lower margins, but from some part of Q2, when the higher cost inventory is drawn down, beyond that, the earnings growth will rebound. Especially the biggest sector in the market, something like your banks and NBFCs, the lenders, they are they are doing very well. We have seen the system credit growth rate of 17% plus recently. So in that environment, the growth should be very good when the results come. Asset quality across all segments, there are no pressures. Even the poorest, like the microfinance segment, is also showing good asset quality. Your NIMs, which were the issue last year, have bottomed out, and valuations in that pocket is still reasonable. So there's room for good re-rating in that segment. So that's one segment which we like, and that's the biggest part of our market. So I believe when these lenders start moving, that's where you will see the markets also move up.
But that will also mean FIs need to come back, Rohit, for lenders to move up, because I believe from a DI standpoint, I mean, they've built the position within the BFSI segment till the neck, right? I mean, you're neck deep in that position. How much more can you build from a position standpoint? So FIs really need to come back then.
Yeah, so that challenge, I'm not sure is going away that quickly because the whole trade for FIs was first developed markets versus emerging markets, and within emerging markets also Korea, Taiwan being favored as positive AI trades versus India. So that's not something which is going away in a hurry. However, somewhere fundamentals will also catch up. So what happens is what we have seen is level of selling by FIs is slowing down, and that itself is good enough to take care of movement in the stocks. If FIs stop selling, that itself will help the stocks move up.
Okay, and what will that trigger be for FIs to come back, Rohit, in your opinion? Because, I mean, the way I see it, India has always traded at a substantial premium, but now the global earnings are starting to exceed or accelerate versus Indian earnings, which means that that kind of incentivizes FIs from really coming back, right?
Perfectly true. So that's where the challenge for FI is why should they come to India today when they are getting higher earnings growth somewhere else? But the key is India's earnings growth has been more secular in nature, while the current earnings which they are getting in, let's say, Korea or Taiwan are more cyclical. So right now they are looking very good, but let's say a year or year and a half down the line, when new capacities come up and some AI capex slows down, you'll see that earnings come off also equally sharply. And that's when you will see really FIs coming back to India. So I'm not expecting FIs to come back to India immediately in a hurry. Only thing I'm expecting is the pace of selling which FIs had so far, that will slow down, earnings growth kicks in.
Got it. Okay. Rohit, sectors, we've spoken a little bit about BFSI as a possible pocket which you need to monitor, and maybe H2 FY27 brings those solid returns. First, I want to try and understand how much within BFSI and banking or lending financials, within the lending pack, will the re-rating be sharp? Will it be 50% thereabouts in terms of the multiples? Because you're trading at sub 2 times book on most of the banks. Do they go back above 3 or maybe 2.5 now? How should one look at the re-rating at play?
That's very tough to say, very, very tough to say how the re-rating or how much re-rating these banks can have. But yeah, without FIs coming back and participating in this rally, you won't expect that sub 2 times to go to 3 times, definitely.
Okay, and point taken. And with regard to other sectors or pockets that you're liking, give us a sense.
Sure. So biggest one I said is the lending financials. Beyond that, we like this data center as a story, which we are playing through some power and capital good names. We like hospitals segment within the pharma space. Then there are niche players within the IT segment, like those in advertisement technology or quick commerce, and some auto ancillary players.
And what would the tilt, for example, on auto anch be? Do you prefer a particular pocket or is there a preference within auto ancillaries as to what you like?
No, auto ancillary, it becomes more bottom up after that. There are certain companies which are gathering higher wallet share and showing good growth and showing good consistent growth. So we favor those companies.
What about the likes of a Titan and maybe some of the consumer durable names, right? Consumer discretionary, consumer durable. What are you liking within that pack?
So that pack also, we have been positive that pack. Part of that pack has done well also in the current run-up. So right now, I would be more neutralish in that. But however, there were certain segments within consumer durables which took a hit when crude went up because they had crude as a raw material. That part of the consumer discretionary pack can see a bounce back with crude coming off.
Okay. Rohit, thank you so much for joining us. Gives us a sense as to what you're liking and how you're looking at the markets. Thanks so much.
Thank you.
All right, let me bring on board Avi again. He's here with some of the stocks you want to keep on your radar for this afternoon's trade.
Some of the stocks buzzing. Starting off from SETL, which is up by almost 8%. SETL's management, talking exclusively to ET now, has guided that their business will grow by 50% in the current year with additional 250 crores of top line from their G-Scale Energy. They are anticipating that 10% of the FY27 order book to come from exports and the revenue split to be 30 to 40% from exports while the remaining to be from the domestic business. Talking about rights, the stock is up by almost 15% on back of two big newses. The first one being bagging an order of 175 crore rupees from Babasaheb University for PMC, which is Project Management Consultancy, and the other one being that they have signed an MOU with Concor, which is Container Corporation, for providing PMC services. This possession rights to bag large ticket logistics infra consultancy orders. Up next is MCX, wherein Jefferies has given the stock a buy rating with a target price of 3,600 rupees, which is an upside of 27%. India's commodity market lags equity, but the penetration is expected to continue to rise. The forecast is that MCX top line will continue to grow by 20% despite the revenue being higher. Our last pick would be Adani Ports, wherein global company MSC's terminal arm is going to acquire a 49% stake in Viranium port of Adani Ports for a deal size worth $1.397 billion. This is at an implied valuation of 19 times EV by EBITDA, which is at the higher end of the spectrum, and the payment to come in two tranches, first one being $539 million upon closure of the transaction, and the other one being $858 million, which will come after the phase 2 expansion by the end of December 2028.
Okay, thank you so much for that, Avi. We'll do a quick break at this point, dive into a commercial, come back, talk more, and we'll start to get a view with regard to what levels to look out for really in trade today. We'll have Merrill come in, and we'll have Nagaraj Shetty from HDFC Securities come in, give us his views with regard to the market on the other side of the break.
Back with closing trades right here in ET now. Let's just revisit where the closing trades are settling in at before we highlight some of the stock buzzers in trade. And we've been largely range bound, but the good thing is that we've made it back to that 24,100 mark, or at least testing that level for the Nifty futures. While IT, of course, continues to be that one pain point, names like Eternal, Adani Enterprises, Asian Paints, Unilever, M&M and SBI, along with Maruti, which has really moved from strength to strength since yesterday. Those are the category of stocks which are holding the Nifty up. Good to see that the market breadth as well continues to be in favor of the advances, and that really has been the highlight of the market rebound since those March. Delivery higher by 7%, Page Industries higher by 5.5%, Dabur up 4.5%, and MCX as well, which is sitting on a gain of over 4% as we speak right now. But Mithali is here to highlight some of the stock newsmakers this afternoon.
Right, talking about the buzzing stocks for today's trading session. First up is Pesaro Digital. The company has announced that the promoter's stake has been increased from the earlier of 41.75% to now 46.72%, and that alone in first quarter of FY27. The stock reacted with an upper circuit of 20%, as the management also guided that they're targeting for doubling its AUM, their income, as well as profitability over the next 3 years. Next up is Aarti Pharma Labs. That stock is in focus after the company inaugurated its new manufacturing block at its Tarapur Unit 5, which is facility situated in Maharashtra, a move that will expand the production capacity and support the future growth for the company. Also, APL Apollo Tubes, that stock might be under pressure after its first quarter business update, which was on a softer side. Company reported the sales volume of around 7.45 lakh tons, down over 6% on a yearly basis, pointing to a softer start for this financial year. Also, Moripin Laboratories, that stock is another in focus. The company has begun the commercial supplies under its 825 odd crore rupees of CDMO mandate. Already a leading API manufacturer, this marks an important step in its strategy to expand into the higher value contract development as well as the manufacturing business. And finally, Zaggle, which has partnered with HPCL for a 5-year fleet management program, strengthening its presence in enterprise mobility as well as the corporate expense management. Back to you.
Okay. Thank you so much for that, Mithali. Let me go across. Nagaraj Shetty joining us from HDFC Securities this afternoon. Nagaraj, the market, we've seen a very decent bounce, right? 133 points now. 24K is what we're currently testing. Can we hold that level? And would you be positive if we do that for the rest of the week?
I think the near-term trend remains range-bound with positive bias for the market. Market has been moving in a narrow range. At the higher levels, 24,200, at the lower levels, 23,800 has been acting as a hurdle and support for the market over the last couple of weeks. I'm not expecting a bigger decline from here onwards. We have seen decline from the upper range of around 24,200 levels. Now it has bounced back from lower levels. I think 23,800 is going to be a good support for the market, and we should see some meaningful bounce back from here onwards. From the next, I'm expecting Nifty to reach up to 23, 24, 200, 250 levels in the short period of time.
That's the take coming in on the Nifty right now. But Nagraj, clearly the one sector which is leading thanks to Maruti and many other mid and small caps is autos. What is it that you're foreseeing on Nifty, and whether you're seeing any trading opportunities for any of the auto stocks?
Yes, Nifty Auto has been in a sharp uprun over the last few sessions. Frontline and mid-cap auto stocks are moving like anything. And even if you look at Maruti has witnessed upside breakout of 200-day EMA around 14,000 level. It was moving in a larger consolidation, now placed at the edge of moving above the bigger consolidation pattern. Overall chart pattern is looking positive. I think from here onwards, 15,000, 15,200 is going to be the next hurdle once it gives a breakout from this current resistance.
And Nagaraj, your top picks for this afternoon?
Sorry?
Your top picks, top stock ideas, stock picks?
Yes, Harsh. I have two stocks here. I have two stocks for the long side. First one is delivery, as we discussed a while ago. The chartically delivery has been in a consolidation phase recently, witnessed sharp breakout in the last two sessions. What is it currently placed at the important resistance of around 500, 505 levels, multi-month breakout point. I'm expecting a further upside from here onwards and a decisive breakout in the short term. So one can look to buy at this point of time, currently trading around 506.90, 507. The immediate target would be around 537, 538, and one can place a stop loss at 485. Second one is PG Electroplast. After a small downward correction, the stock has bounced back from near 538 levels. And the overall chart pattern is indicating a formation of higher bottom reversal. And the chart indication is signaling that more upside in the near term. And one can look to buy at this point of time. The immediate target would be around 580. One can place a stop loss at 530.
Okay, Nagaraj, taking a bit of a pause on this conversation. Plenty to talk about, though. Lots of stocks moving around. We'll take some of those views, especially the likes of a KPIT. Stock is down 17% at this point of time. We'll take some of those calls on the other side of the break. Welcome back, and Nagaraj still with us. Nagaraj, plenty of buzzers, frankly, in trade today. I was just, looking up stocks that are moving. REITs is up 15%, for example. I'll come to REITs in a bit. Eternal up 5.5%. What's the view there now?
Eternal is looking positive. What we can observe on the chart is the decisive upside breakout of 200-day EMA. And also the stock price is placed at the edge of moving above the larger consolidation pattern. The chart pattern is looking positive. Today's upside breakout was associated with rise in volume as well. So 300 is going to be the next resistance for the stock price, in at least for the next few weeks.
Right. Okay, that's the take coming in on Eternal. That definitely has been one very strong stock of late. SBI is making a decent move today. And today, along with yesterday's move on Maruti, is the one which is powering ahead after its monthly sales data looked good. So that stock as well, even though it's come off from the top of the day, but it's back to those 3,100 levels on the futures. Other than that, some of the consumption plays or FMCG plays are the ones which are seeing some renewed vigor. So Nestle, Unilever, Dabur, all of these names are seeing some decent moves. Nagaraj, any trading opportunity here within FMCG, Unilever, or for that matter, Nestle or a Dabur?
Dabur is the one which is looking positive at this point of time. After showing a choppy moment last few weeks, the stock price has broken above the multiple hurdles of 10 and 20-day EMA, looking very positive, and volume is also shot up during this upside breakout. I think fresh up move has emerged from the bottom reversal, looking positive, and I'm expecting 460 is going to be the next resistance to be watched for the stock price in the next 1 to 2 weeks.
Consumption themes, even those seem to be doing well. Let's pull up a Titan. Trend ever so well last couple of weeks, Nagaraj. There is Page also, which is up 5.25%. So you're seeing some decent kind of moves there. You're seeing moves on some of the real estate plays, but I'll come to real estate in a bit. What about that consumer discretionary pocket showing some strength today?
Yes, obviously showing some strength because we have seen some upside momentum from the lower levels and consolidation moment. This is just a fresh breakout in these consumer stocks, and I think the more upside is likely at least for at least for this week as well as the early part of next week.
Within that pack?
Yeah, I have a couple of stocks that within that pack, and right now the Page Industries and other one you discussed is looking positive at this point of time. And to discuss about the Page Industries, the chartically it has been on a sharp up move over the last few months. High tops and bottoms are on the cards, and today's up move gap itself is indicating the sharp momentum on the upper side. So though at place at the higher level, still there is no indication of any reversal building. More upside is likely around 47,500, 48,000 48,000 is going to be the next hurdles for the stock price, at least in the next couple of weeks.
Well, delivery, that's the one stock chart which is really spurt up. It's one of your top movers within the F&O pack. Just look at the move on that stock. It's staring at a gain of about almost 7% as we speak. And typically, you don't see delivery actually top the charts within the F&O pack. A very interesting move here, Nagraj. Quite a decisive breakout.
Yes. Just now I discussed a while ago in my pick, it is there. And what we can observe in the delivery is the multi-month breakout, a larger consolidation breakout. It has surpassed the hurdle of around 504, 505, placed at the higher levels. More upside is likely. Volume-driven rally, I think, and supports are placed intact. More upside is likely, I think, around even immediate target would be around 537, 538. And over the longer period of time, the way it has broken out, I'm expecting more upside in the near term.
Oh. Right. Okay. Well, the one space which continues to be weighing in heavy on the markets, and that's technology. KPIT, of course, is one end of the story, which is down 17% now. But look at some of the other peers from within the mid-cap, IT services play. Look at a Tata Elxsi, that's down 7%. Coforge is down 4%. HCL Technology is down 3.5%. TechM is lower by about 3%. TCS down 2%. Infosys as well still lower in trade. And Wipro also is down another 1% as we speak. Nagraj, further weakness you think for the IT pack?
IT is still not out of woods. Pain is left for the IT. Even you can take whatever the name you have discussed, they are at the breakdown point. And KPIT Tech has witnessed a decisive breakdown after a long consolidation. Technically, these chart patterns of a prominent IT stocks are indicating more weakness ahead. The overall chart pattern, RSI, volume pattern are also indicating that there is more trouble for the IT stocks, mid-cap as well as the frontline IT stocks ahead.
Okay, in fact, we've got Darshita from our research desk joining in to talk about the clarification from KPIT with regard to their profit warning. And they did warn of a weak start to FY27, expecting Q1 revenue to decline around 1% on a year-on-year basis in dollar terms. And sequentially, of course, it's going to be a bigger hit. But let's take it across to Darshita.
Right. KPIT Tech has warned the Q1 FY27 revenue could decline by around 1% YOY in the reported dollar terms, as the weak European auto demand and profit warnings from major OEMs hurt the business. Now, the company has also clarified that Q2 revenue is expected to remain broadly in line with Q1. Management says that the slowdown is driven by Europe, where engineering spends have weakened. As a result, the EBITDA and the net profit margins are also expected to decline sequentially due to the limited scope for immediate cost optimization. Moving ahead, despite the slowdown, KPIT says that demand remains healthy in products and solutions, trucks and off-highway, and markets like the US, Korea, and India. The passenger vehicle business is also supported by the new client wins. Moving forward, the company continues to invest into AI-led productivity and cost containment initiatives, which is believed to support the margin expansion over the long term. Now, while the H1 FY27 is expected to remain weak, management continues to expect a strong sequential recovery in Q4 FY27 with stronger growth in the second half. Now, the street will also watch whether KPIT retains its FY27 EBITDA margin guidance of 20.5 to 21.2% and the medium-term EBITDA margin guidance of 22 to 24%, while it says that the European and AI investments. Now, the impact isn't limited to KPIT. The focus here is that Tata Technologies could also feel the heat after BMW cut its FY26 guidance again, raising the concerns over the pace of BMW JV. So for Tata Elxsi as well, with 56% of revenue coming from the transportation, prolonged weakness at European automakers could impact the engineering and R&D spending. That is a broader sector challenge, which we will be seeing in the coming quarters.
Okay, thank you for that, Darshita. Let me go across. Rahul Jain, Director Research at Dolat Capital. We spoke with him on the impact of the commentary coming in from KPIT. Listen in.
There are certain OEMs which are not doing good. They are talking about their profit warnings and all that. So there could be a program which could bother a lot of other vendors for them, and they could be on the IT services side also, and also on the ER&D side. So I would not directly correlate, but yes, it is a painful situation where a lot of companies might see an impact of it gradually. And I think there is at least 7-8% drop to the number that we were building earlier. So that's a meaningful change in estimates. This is what we are anticipating at this point, and we would look forward to their commentary that how things are progressing, how was the deal win, and how are the non-pain part doing in the commentary in the June call. But at this point, it could be 7%.
Main Street clearly worried. 17%. I mean, that's a huge knock on that stock. I mean, we've not seen KPIT trade at these levels. The 5-year average in terms of price to earnings multiple has been closer to 50 times, now trading at 22 times, Aisha. That's a significant derating that KPIT Tech has seen. But Nagaraj, on charts, let me club 3-4 stocks: KPIT Tech, Tata Elxsi, Tata Tech. What's the outlook looking like from a chartical standpoint?
No doubt in all the 3 stocks that the chart pattern is looking negative, and more weakness is likely. Among 3, I think Tata Tech is the one which has outperformed recently before showing a downward correction from 780 levels. Currently at 200-day EMA, placed at important support somewhere around 650, 640 levels. So I'm not expecting a bigger decline as had happened in other 2 stocks. This stock has a more potential of bouncing back from the lower levels. Initially, some more weakness is likely.
Right, okay. Nagaraj, great to have you on the show today. Thanks as always for joining in with your thoughts. Let's take a very quick break, still holding on to 24,100 for the futures. The breath is well tilted in favor of the advances. This at a time when IT is really getting hammered in a trade. We will see how the last few minutes of trade pan out on the other side.
Indian. It is associated with the all-new YONO, power to every
now. New tomorrows, new challenges. And all of it needs energy to work. Not afraid to imagine big. Because when energy stops taking, when it just gives, people can move. Really move. At this moment, the world's evolving. And so is energy. Suzlon. Good energies that work.
अरे यार EMI किराया दवाई कैसे मैनेज करूं?
एक जुगाड़ है, अच्छा पैसा मिलेगा।
क्या?
अपना बैंक डिटेल्स दो, कुछ लोग पैसे भेजेंगे, फिर उनके बताए अकाउंट में ट्रांसफर कर दो। कमीशन तेरा।
इतना इजी?
हाँ। अरे काहे का इजी? ये मनी म्यूल है, इलीगल पैसा घुमाते हैं दूसरे के अकाउंट से। ये अपराध है।
अपराध?
जेल के बर्तन धोने पड़ जाएंगे।
ना भाई ना। जलने जाना है।
RBI कहता है
जानकार बनिए, सतर्क रहिए।
Out you come. With the shortage of brand new aircraft delivery across the world, Emirates decided to go it alone and refurbish over 200 of our existing planes at our own engineering facility. This makes it the largest retrofit program on the planet. For our customers, it means even greater consistency of a world-class product.
जब 11 इंडियन के हाथ में पावर आता है, इंडिया क्रिकेट के मैदान में वर्ल्ड चैंपियन बन जाता है। सोचो, जब हर इंडियन के हाथ में पावर आएगा, इंडिया और कितने मैदानों में वर्ल्ड चैंपियन बन जाएगा।
इसलिए योनो देता है हर इंडियन के हाथ में पावर। द ऑल न्यू योनो, पावर टू एवरी इंडियन।
जिंदल साथी सील है तो असली स्टेनलेस स्टील है।
तो जब भी आप स्टेनलेस स्टील पाइप्स एंड ट्यूब्स खरीदें, जिंदल साथी सील जरूर चेक करें।
जिंदल स्टेनलेस, India's leading producer of stainless steel.
Back with closing trades right here on ET now. Eternal still holding up 5.5% in trade, touching that 280 level once again. Adani Enterprises, Nestle, Asian Paints. And by the way, talking about Asian Paints and some of these other crude sensitives, look what's happening in the crude markets. You've got Brent, which has now fallen below the $70 per barrel mark, and it's now hovering around the $69 per barrel mark. So it's been very, very swift to cool off. And that clearly is reflective in the way some of these oil sensitives are moving. In the meantime, Eicher Motors numbers as well for the month of June flashing for you on your screens right now. While the total sales have seen an uptick of about 27% on a year-on-year basis, maybe the month-on-month data would be a clearer picture. Exports, though, definitely have seen a downtick of about 12% on a year-on-year basis as we speak right now. Eicher Motors currently has cooled off from where it's off in trade. But let me take it across to Sajid and get in an F&O snapshot on what's happening in the market, though.
Thanks, Aisha. You know, we're seeing a good amount of put writing coming in at 24,000 level with the index Nifty itself, crossing that mark in the afternoon trade there. So the Nifty up nearly 0.6%, hovering around the 22 mark. The open interest up nearly 0.3%. So we've seen some shorts getting covered, and towards the second half of the day, we have seen some aggressive put writing with the Nifty Nifty futures trading at a premium of nearly 87 points. In Nifty Bank as well, we are seeing activity coming in with nearly a percentage jump in Nifty Bank, with the open interest build up of 4.38% in that. Look at what's happening in the Nifty Bank constituents across the board. You're going to see long build up coming in across many of the counters there. In the morning, it was the opposite. You were seeing a lot of shorts getting built up there, but now only except for the HDFC Bank, where the short build is happening across the board, whether it's private sector or public sector, there is a long build up happening in many of the banking counters there. Look at what's happening in call and put writing. Aggressive put writing happening in 23,900 and 24,000, and that's getting reflected in the distribution chart as well, where 24,000 is now giving a good support with put writers at the helm having more open interest than the call writers there. In the futures part, we have gainers, which is delivery, which is up nearly 6%. Paytm is a 5%. Eternal up nearly 5% in today's trade, all seeing some long build up coming in. If you look at the losers, you have KPIT Tech, stock falling further to nearly 17% down in today's trade. 551 is where the futures is trading. Tata Elxsi and Coforge. So the IT pack getting hit badly in today's trade, especially the second rung IT pack there. Open interest gainers include KPIT, 70% jump in open interest for KPIT. Tata Elxsi is seeing nearly 25% jump, and 361 is seeing nearly 17% jump on the back of short build up coming in there. In the losers pack, MCX, there's a short covering happening. Colgate is seeing a short covering, and Mazagon Dock is seeing a short covering there. Most active today in today's trade is Maruti Suzuki, 15,000 July call. the premium of nearly 39 to 150, 190, and the open interest up nearly 24,000. So it's given up most of the morning open interest gains towards the end, but the stock hovering around 14,413 levels there. Again, in the put side, we have KPIT 600 July put is very active, 7.79 lakh contracts getting added. The stock down 111 to at 552 levels there, the premium of 50. So the market bouncing back in the second half with crude cooling off and a lot of put writing which is coming in, giving it support at 24,000 level.
Okay, that's what's happening in the F&O markets. Let me now welcome on board Aditya Kondavar as well as Kapil Shah to highlight what their observations on the markets are. Aditya, Kapil, both of you, afternoon. Aditya, if we could start off the discussion with you. The big talking point is that mega cool-off in crude. We're now sitting at sub-70 levels on Brent, $69 to a barrel. But then again, we've got a big litmus test, the earnings coming up. And, you know, the feelers that one is getting from KPIT doesn't give you a good feeling, at least about the IT services sector. Tell me, how are you reading into what we're likely to hear from IT services as a pack?
Hi, Aisha, and good afternoon to all your viewers. You know, like we have a chef special every week in the restaurant, right? We have a casualty every week in the IT sector. You know, unfortunately, the whole sector has gone through a very bad phase of derating, negative news, and a lot of positive and negative commentary coming out. You know, on one end, we have a lot of AI companies saying that, you know, they can completely make processes obsolete. And on the other hand, we also have some AI companies saying that, you know, the initial presumptions that, you know, one AI model can actually replace 5 humans is completely false. In fact, we have heard from many leaders that, you know, AI is becoming more costly and costly as the power of compute, the cost of compute, the cost of memory chips, and the cost of power keeps going up. Now, coming specifically to KPIT and the IT sector, I feel that, you know, like you guys were just mentioning that KPIT's 7-year, 8-year average PE is closer to 50. And today the stock trades at a PE of 22. Now, all we saw coming in from the management was saying that they would see a 1% dollar revenue decline. But, you know, we have to see it in the context of currency as well. You know, Q1 FY26 versus Q1 FY27, we have seen almost a 10% depreciation in the rupee coming in. And, you know, as per estimates, as per a few good brokerage estimates, you know, KPIT can actually report a 50% jump in its net profit from the 600 crores that they did last year to almost 900 crores in the next 2-3 years. So, you know, the forward stock P actually becomes only 11 times. And when you actually compare it to the average 50 P, we know that, okay, it comes out to be a very value buy. Now, the same thing is prevalent in all the IT companies. You know, all the other IT companies have seen major derating in terms of price and valuations. So this is not a question of what, but this is a question of when, right? You know, we all know and we are all seeing that, you know, maybe all of these IT companies will go through a tough, long phase of time correction. Price correction has already happened in the last 6-9 months, and maybe we are in for a long phase of time correction. But, you know, not all things are bad. You know, crude has come down, rupee is appreciating. We have seen the rupee stabilize. We have seen we have seen the pace of FII selling reduce as well. We have seen a lot of good debt inflows. And obviously, you know, when crude is below 70, I think all the stars align for India. And rightly said, you know, the real litmus test for India would be the Q1 FY27 earnings. Q4 FY26 was obviously a very, you know, reported a very stellar set of results. But, you know, obviously a lot of this raw material inflation, price hikes, you know, RM inflation would be seen in Q1 FY27 results.
Right. Aditya, interesting. And what I caught on to as part of everything you said was the 640 crore PAT, which KPIT has done in FY26. You're saying will go to 900 in 2 to 3 years. That is assuming that the growth comes back, right? What gives you that comfort?
Correct, Harsh. So the fact is that, you know, these estimates are there by prominent brokerages. In fact, JPM has had a report come in the morning, and they have also estimated a 920-930 crore kind of a PAT by FY29. So obviously this report presumes the fact that, FY27 or, specifically H1 of FY27 would be kind of a washout for them. And it would be only in H2 FY27 that the growth would actually start bouncing back. Now, what has really happened is that two major OEMs for KPIT, one is BMW, which is around 12% of the revenues, and Volkswagen, another top 15, top 20 of their clients, they are experiencing some slowdown. And we have all seen the news of what is happening with Volkswagen. In fact, the German cabinet, the German labor force is, basically forcing them not to shut down their factories because it will lead to a 1 lakh employee loss, right? And they were planning to shift this manufacturing to China, but then, a lot of discussions are going on. Volkswagen is a very crucial part of the manufacturing footprint in EU and Germany. And the report basically presumes that growth will basically start coming back from H2 FY27. It also estimates that the two big programs that were going off ramp for KPIT would be replaced by a lot of new other projects as well.
Right. Okay, that of course is KPIT and how to read into prospects of investing into the IT sector henceforth. But just taking a look at where some of the IT names are, Coforge, Tata Elxsi, KPIT, HCL, clearly these stocks are seeing some fresh breakdowns. But Kapil, wanted to get your sense in on the charts and whether you see follow-through weakness in the coming days?
Yeah, for the IT sector per se, we can see that. The low that has been registered in the year 2022 was around 26,000 level, and we are reaching that particular threshold. So this is a very new round of selling pressures, and stocks like today, one of the bigger buzzer stocks like the KPIT stocks, it has also fallen quite well. And on the monthly chart, because this is what structural damage those companies are going through, so I need to look at it in the higher time frames. So right now the stock is trading at a 556 level around, and the monthly inception point of a rally that we have seen in the year 2022 was in the range of 500 to 450 level. So I believe that that can be the further more scope of a declining momentum, but in the same range 500 to 450 level, so there can be some sorts of a stabilization. But with the IT sector, we never see the U-shaped recovery. They falls down, they go through the price-wise correction first, then they go through the time-wise correction, and then they revive. So it is going to take the longer time before we see the meaningful upside momentum in the IT stocks.
Okay, let me in fact also bring on board Anurag. He's here and switch focus from this conversation to motor third-party insurance premiums. They're set for a review after 3 years with no sharp hike expected for cars and two-wheelers. However, a recent Supreme Court ruling on motor accident compensation could increase insurers' claim payouts and future third-party liabilities as well. Anurag here with more.
Rates of motor third-party premium is all set for revision after a period of 3 years, and as per our sources, a proposal has been sent to MoRTH, Ministry of Road Transport and Highways, by Department of Financial Services and insurance regulator IRDA for revision. Last revision happened for two-wheelers and cars in year 2023, and after that insurance industry was demanding upward revision, claiming their increase in loss ratios. But as per our sources, this time also upward revision will be minimal only, and it will be linked to the actuarial calculation, and few segments like school bus and three-wheeler passenger segment may see decrease in rates also, because loss ratios in these segments are just 30 to 40% only. So another development which happened in last few days is a Supreme Court verdict on homemakers, and the MSCT claims will go up after the Supreme Court verdict. So that has also made a stronger case for insurance companies to demand upward revision in motor third-party premium. So going ahead in coming days, we'll see new rate for motor third-party premium because motor third-party insurance is mandatory as per the Motor Vehicle Act on each and every vehicle running on road.
Okay, that's that on third-party motor insurance. In the meantime, the one sector which has really stood out of late, other than, of course, autos which are looking charged up since yesterday, has been pharmaceuticals as a pack. Kapil, curious to know where within pharma are you looking at opportunities? Because across the spectrum, large caps, mid caps, they're all, and some of them are actually sitting at pretty much lifetime highs.
Right. So basically, pharma stocks today it is a retracing bet, and many times it has been observed that even the market is getting some sort of a positive momentum, the defensive sectors like pharma come to the back seat. But structurally, if we see pharma sectors has been over the period of time, we have seen the very positive momentum, and it is not just in the pharma sector. If we look at the broader spectrum of it, PhD, pharma, healthcare, and diagnostic. So across the three particular sectors, we have been seeing the positive momentum. But in the pharma pack, some of the leaders are from the second tier stocks, like in mid cap, small cap stocks are doing phenomenally well, wherein we have a kind of eye on JB Chemical, Pharma, Granules. They have been doing quite well. On the large cap front, Torrent Pharma is the one particular stock which is has a very low beta on the downward side, and whatever the declining momentums are happening in the Torrent Pharma, it captures, means the buying pressures are coming in and push the stocks on the high side. So basically, three stocks like a Torrent Pharma, Granules, and JB Chem, which comes under our radar.
Okay. Kapil, IT on charts at all attractive?
IT means the stock, it has broken its support level. There is no any such kind of reversal signs that we are seeing. And at this particular point, we will avoid to catch the falling knife.
How are you playing consumption, Aditya, or how do you suggest one plays consumption? What is it within consumption that you're liking?
So Harsh, auto ancillaries are the top of the pack for us in consumption because again, you would have seen the auto sales coming in today. M&M doing a 30% growth, Maruti, India's largest PV maker, doing a 20-25% growth. Ancillaries guiding for 30-40% growth. Doubling their PAT in the next 2-3 years. Consumer staples are also doing well. I think the fact that a lot of legacy FMCG companies are now getting more agile. ITC has spoken about doubling, tripling their FMCG and their protein portfolio. Companies like Marico have been acquiring 1 or 2 companies every year for the past 10 years. We have seen a huge influx of D2C brands in the spaces where traditionally FMCG companies were not present. So, betting on good FMCG companies who are agile, who are targeting new markets, new geographies, new consumer geography, right? And I think they are also preferred. And obviously, auto ancillaries for the fact that the passenger vehicle, the two-wheeler, the growth that has come in, and obviously the ancillaries that have benefited from it are still good to ride, I feel. Just take the case of passenger vehicles, right? Last year we did almost 47 lakh passenger vehicles. This year we may end up doing some 50-51 lakh sales in passenger vehicles. Tata Motors has guided for almost 64 lakh units of passenger vehicles being sold in India by FY31. EV has picked up a lot, ever since West Asia war started, or in fact, even before that. The EV penetration in passenger vehicles went up from 2.5% to 5.5% FY26 end. Tata Motors chairman again said that the penetration now stands at 7% as of June end, and we may even end up reaching some 10% by the end of this year. So a lot of good consumption trends are underway in the economy, and you have to be very specific on the kind of OEMs you bet, the kind of ancillaries you bet, the kind of FMCG companies you bet. Companies like Trent, who have a brand like Zudio. They sell products which are only below 1,000 rupees. So there's a stat which says that almost 40-45 crore people in India have never gone to a mall. So it's a company that enables first-time mall goers. So it's a huge space to be in. And don't take this as recommendations, but just as names that you can study, or you can just listen to the commentary. So right from clothing to your consumer staples to even automobiles, I think trends are quite strong in India. And especially after COVID, we have seen that consumption trends are quite strong. We used to say that sectors like automobile are tactical in nature, but as we have seen over the past 5, 6, 7 years, they are quite secular in
Right.
nature. This is a mega cycle of sorts.
Absolutely. In fact, the other one from the consumption spectrum, which is holding out, is Page Industries as well. Look at the move on the stock at this after Citi upgrade stock to a buy with the target price of 47,700. They've introduced a 90-day positive catalyst watch. They're saying that the risk reward is now turning favorable after 3 years of the downgrade, and they believe worst of operating drag is now well behind for Page Industries. High realization led by price hike and product mix is only going to aid the growth for Page Industries going forward. Key drivers, of course, in the very near term, according to them, are new product acceptance, lower competition, and inventory normalization as well. But Kapil, read through the charts because Page as well has seen a very big move today.
Yeah, but if we, recently, if we see not just in page industry, but textile as a whole, we have been seeing that there has been quite a strong upside momentum that has been emerged. And coming to the page industry, it has formed a very nice chartical formation or chartical geometry. It means the 30,000 was the level where it was formed the double bottom, and thereafterwards from past 4-5 months continuously we have been seeing on the positive momentum on the high side. Yes, in the short term, the momentum has quite extended from 30,000 to the almost 44,000 level, but still it has a further scope of improvement, and the next best potential reactions or upside potential that we are seeing will be around 46,500 level. So still means 300 points around it has an upside potential. 3,000.
Okay, let me go across to Avi. He's standing by with the car trade tech management. They were upbeat after highlighting a good growth roadmap. The company aims to maintain its market leadership, AI-led intelligence, and the like. And Avi here with the highlights. Stock up 5%.
Carter Technology has come out with its strategic business update, and the management is giving some very strong business outlook. They are saying that the strategy is built on 3 major pillars, which is market leadership, AI-driven intelligence, and transaction enablement. The company is evolving from a classified marketplace to a full-stack automotive ecosystem. AI now guiding the entire buying journey from discovery to comparison, negotiation, financing, and ownership. Used vehicle will be one of the biggest growth engines for the company with AI-powered inspection, warranties, pricing, and insurance. SuperDost, which is a WhatsApp-enabled instant buyer and seller matchmaking tool, is going to be a game changer for the company, with financing also being one of the growth engines for the company as it now ties up with IDFC First for instant loan approval and digital disbursements. OLX is also being repositioned from a classifieds to a transactional marketplace, which includes verification, escrow, financing, logistics. It has also launched Via AI, which is a unified AI assistant across Carwale, Bikewale, and OLX platform. This is India's first automotive-focused SLM built on proprietary marketplace data. The company is also now diversifying its monetization efforts with premium subscription like Elite Buyer and Sellers showing some good traction, and financing, inspection, insurance also reaping revenues for the company as it moves just beyond listing. It is also important to note that the company has no debt, no inventory, and is working on an asset-light model with around 1,250 crores of cash on its book. And the company's EPS has grown by 47% in the last year, with a 3-year EPS CAGR at around 87%.
Okay, that's that on car trade. And this, of course, has been one of those stupendous movers, even through all the turmoil in the market through last year and so far as well from the March lows. It's done very well. For the Nifty, though, we're just dwindling around the 24,000 mark. But Kapil, just wanted to reiterate your strategy on the index and whether you believe that the strength in the mid-caps is going to outshine what the Nifty does.
Of course, means let's say Nifty from past 12 trading sessions, it has been trading in a 4 to 500 point range, and from the 45 trading sessions, the Nifty is trading in the 1,000 range. The large cap pack we see into the quite a congestion mode, but if you look at in the mid cap pack, so since 2001 till date, so almost 20 years history, whenever the Nifty mid cap 100 has broken out its in a previous base area, it has ended, it means a new era of Teji or upside momentum that has been started in, and that upside momentums are quite significant. And here also means after the 2 years kind of the stagnation period, the 61,500 was the level where the breakout has to happen. So right now we are trading above the breakout level. So mid cap is likely to outshine the large caps in a coming time.
Couple, some of the buzzers, we spoke a little bit about Page, but give us a sense about car trade as well. 5% uptick on that stock.
Yeah, means right now the new age stocks across the pack we have been seeing the positive momentum, whereas the car trade was one of the leader in the new age stocks. But after the very significant upside momentum from the right away from the 1,700 level to almost to 2,800 level, it has come near to the resistance level of 2,900 level. So after the very strong stretch on the higher side, this is cautious level from the shorter term perspective. The new round of a rally, or if I have to become of bullish again on this particular stock, so I have to put in one particular validation that above the 2,900 I can see the further upside momentum, but right now we are trading near to the resistance level.
Okay. Some of the real estate stocks as well, Kapil, are among the buzzers. What's the view there, and any top picks?
Yeah, means real estate stocks of lately means today it is one of the leader within 3% kind of a gain in the real estate. If we have to look at a bullish continuation stock, so that is the Phoenix Limited. It has been trading on the higher side and giving the fresh breakout. So that is a stock which has did well and likely to do well. And another stock from the bullish reversal sign. So stock has witnessed a very strong amount of the selling pressure, and from past couple of months it has been stabilizing and getting a momentum on the high side. So that is the Godrej. So these are the Phoenix and the Godrej property we prefer to play the reality sector bet.
Right, okay, that's that on realty. Just taking a look at what the rest of the market is indicating, and definitely want to revisit some of those banking names. Let's start off with the Kotak, Axis, HDFC. Given the kind of news flow that we've seen around these names, where is it that they're settling in at? Kotak, I can see, is actually holding up 1.6%. Axis is higher by 1.25%. SBI is looking good. Let's see what Bandhan, etc., and the likes as well are doing in trade. And largely, you are seeing banks pretty charged up in trade. HDFC Bank as well will come off you on your screens next, while SBI, of course, goes strong. It's flattened out for Bandhan Bank. And HDFC Bank has had a bit of a choppy ride today, finally settling in around those 795 odd levels. Kapil, what do you read on the charts for HDFC Bank finally?
Yeah, HDFC Bank from 726, it has picked up the momentum near to the 8 level, but again, it has been means a very huge elephant to shake. So right now, the prices has been moving on, but still 800, 820 seems to be the resistance level point for it. In large cap pack, we like Axis Bank as an bullish continuation. And there is some sort of contra call on the IndusInd Bank also that we are sensing. It is on the edge of a breakout. 950 was acting as an resistance for a couple of days. Once it is getting breached, we see the further positive momentum. But actually, action is happening in the second tier stocks. Means in the second tier stocks, I like the CUB, City Union Bank, and Equitas Bank.
Wow. What about some of the financials at the broader end, JM, Paytm? Those are some of the buzzers in trade today. Any of those names on your radar, Kapil? A JM Financial, a Paytm?
Yeah, in a recent time, if you look at in a capital market category, the capital market category, we have been seeing that the data and exchange platforms has taken the backseat, and the brokerage companies and financial distributor companies that has started to pick up the momentum on the higher side. So in the that predicted model also is quite looking good on the retracement. It seems to be a buy opportunity. Paytm is a kind of very interesting bet because it is rebounding from the very huge base and showing the bullish continuation sign. So 1,200 is the level right now, 4.8. And on the higher side, Paytm looks to improve up to the 1,280 to 1,300 level. So Paytm looks good on that front.
And what about REITs? 13% move. I mean, volume driven as well. How is that one looking on charts?
Yeah, I think today some sort of order we has put the prices on the high side. Otherwise, the CPSC as in wall pack, it has been remained in the doldrum shape, not into that much kind of the positive momentum. And whatever the upside momentum that it has given, mildly it has shaved off as well. And I see that there can be the further extension of the move, but it is not the momentum where we can chase the momentum, because on the higher side again near about by 240 250 it is likely to face the resistance level. So this particular stocks not to chase the momentum kind of a situation seems to be.
Okay. All right. I also want to quickly take your view on some of the defense names and maybe some of the railway names as well, because along with Realtel, there are plenty of other buzzers. For example, a BML is up nearly 4% in trade. You've got a Realtel up 3.25%. Ircon is up 3.25% as well. Rights, obviously, we just spoke about. Any of those names at all on your radar?
In such kind of stocks, what is the concern is that they have been remaining in a downward trajectory, and whatever the upside momentums that they go through, they are quite short-lived. They are trading all below their moving averages and moving average with a downward slope. So in such kind of stocks, they don't give a comfort to be with the stocks. Either if I'm getting the stock at a very low level or at a very strong support level, then that is fine. But after the uptick of, let's say, 3%, 4%, the risk-reward ratio comes on the very skewed level. So I will not prefer to chase the momentum in such a names because structurally they have not been that much outperforming category.
So much for coming in and giving us your views. Really good having you here. Completely timed out, in fact, on this edition of Closing Trade. Let's quickly start wrapping up. 120 positive points on the Nifty today. 0.5% higher, very decent outing to start the month of July. 0.4% higher on the Nifty small cap, the mid cap still lagging, so that's the tilt. In terms of the Nifty, 2:1 in terms of the advanced decline there, and that's what's really driven the Nifty higher. Eternal was one of the top gainers, but outside of that, quite a few, in fact, in terms of big gainers. Adani Enterprises, Nestle, Asian Paints, all getting 3% plus. HUL also up nearly 3%. Adani Ports, Ultratech, M&M are just some of the big gainers for you today. In terms of losers, HCL Tech, Tech Mahindra, TCS, the top three losers from within the IT pack. Hindalco, Tata Steel. So it's metals and it is IT, from a sector standpoint. And IT was in fact down 2%, the sector itself. So plenty of pressure that IT is seeing at this point of time. 1% lower on metals, 0.5% lower on pharma. 3.5% higher on the Nifty Realty Index. That one is up and away. Nifty FMCG up 2% as well. Auto is up 1%, and so is the Fin Nifty and the PSU banking pack, as well as the banks. Around 0.2% higher on some of those. When you're looking at the Nifty 500, again, the breadth was decent out there, but slightly less than 3:2. So not as strong as on the Nifty. Rights was the big gainer there. Reliance Power venturing into the AI theme is obviously the other one. 9% higher on Reliance Power. Delivery, Inventorist Knowledge Solutions, Hexaware Tech, TBO Tech. Those were some of the high flyers of the day. Aegis Logistics, Eternal, 6% higher, makes it to even the top 10 on the Nifty 500. Then there's Paytm, which has done very well for itself, and RHI Magnesita. Those are just some of the gainers. From within the consumption pack, there's Dabur, which has done really well. Page Industries has done well. DLF, Godrej Properties, those are some of the gainers from within the realty pack. Even CEAT from within the auto and the consumption pack doing well for itself. Prestige also did very well. So that was broadly the tilt. Imami was up 3.5% as well. Colgate was up 3.5% as well. So consumption as a pack has done very well in trade today. But completely timed out on this Wednesday's day of trade. We've held on to 24K. That's the real positive. And it's a very nice move, especially from the lows of the day. Completely timed out from Aisha, myself, everyone who puts this show together. Thanks so much for watching. Stay with us here on ET Now. More action to follow. We'll also be doing a very special show on KPIT Tech at 4 p.m. today. You want to tune in to get a perspective of what next with regard to ER&D and what the read-through with regard to KPIT Tech's commentary is really coming in terms of how our analysts are looking at it. So stay with us for that. But completely timed out on closing trades. A goodbye from us.